Picture this. A man, let's call him Carlos, he works hard every week. He sends money to his family back home. $200 here, $300 there. It's normal for him. He does it every month. But one day, he walks into his bank and the teller looks at him differently. She asks him questions. She wants to know, where does this money come from? Why do you send it? The bank puts a hold on his account. Carlos is confused. He didn't do anything wrong. So what happened? Why did the bank do this?
Wait, that sounds really scary. I would be so confused if that happened to me. Did Carlos break a law?
That's a great question, Taylor. And the short answer is probably not. Carlos most likely did nothing illegal, but the bank saw a pattern that made them ask questions, and that's exactly what we're going to talk about today. Welcome to Speak English in the USA. I'm Alex.
And I'm Taylor. Today we're going to help you understand something that confuses a lot of people, especially people who are new to the United States or who send money to family in other countries. We're talking about the $10,000 rule, and by the end of this episode, you'll understand exactly what it means, what banks are watching for, and how to protect yourself.
Don't let the numbers scare you. This is actually a very normal part of how banks work in America. So many people hear the words bank reporting and immediately think, oh no, am I in trouble? Let me explain. In the United States, there is a law. It says that every time someone deposits or withdraws $10,000 or more in cash in a single day, the bank is required to file something called a currency transaction report. People often call it a CTR. This is not optional for banks. The law requires it.
Okay, so a currency transaction report. Can you break down those words for our learners?
Of course. Currency means money, actual cash, physical bills. Transaction means a financial action, like depositing, withdrawing, or transferring money. And report means the bank sends information to the government. So a currency transaction report is when the bank tells the government, hey, someone moved $10,000 or more in cash today. The bank is basically a messenger.
And is that a problem for the person? Does something bad happen automatically?
No, and this is the most important thing. This reporting is completely normal. It does not mean you're in trouble. It does not mean the government is going to arrest you. It's just information. It's paperwork. Most people who trigger a CTR are just regular people doing regular things. Business owners, people buying cars, people sending money to family. Nothing automatically happens. The report is just a record.
That's really reassuring. Okay, so what's the next part? You mentioned banks also watch for patterns.
Right. The government doesn't only watch for the amount, they also watch for patterns. Imagine you normally deposit $200 every 2 weeks. That's your pattern. It's normal for you. But then suddenly, for 3 months, you start depositing $9,000 in cash every week. That's a very different pattern. The bank notices changes like this. Changes can trigger questions, even if the total is never over $10,000 at a time. Think of it like this. If you normally drink 1 cup of coffee a day and suddenly you drink 15 cups, someone might ask, what changed?
I love that example. So it's not just about the 10,000 number, it's about your whole behavior over time.
Exactly. Banks are trained to look at the big picture. They look at your history, your habits, and whether something suddenly changes. This is part of what's called anti-money laundering rules, or AML for short. Banks have to know their customers. They have to understand where money comes from and where it goes.
Okay, I've heard the word structuring before. What does that mean in banking?
Great question. Structuring is when someone tries to avoid the $10,000 reporting rule by breaking up large amounts of cash into smaller deposits. For example, instead of depositing $11,000 at once, they deposit $5,000 on Monday and $6,000 on Tuesday, on purpose to stay under the limit. And here's the important thing. Structuring is actually illegal even if the money itself is completely legal. If you have $11,000 you earned from your job and you break it into 2 deposits just to avoid the report, that itself is a crime, even though the money came from legal work.
Wow, so the act of trying to avoid the report is the problem, not the money itself.
Exactly. So don't try to be clever about it. If you have legal money, just deposit it normally. Honest people don't need to hide. And this brings us back to Carlos. The big difference between someone doing something illegal and someone like Carlos is transparency. Someone doing something illegal tries to hide things. They don't explain. But Carlos, if he tells the bank, here is my paycheck, I send money to my mother every month, that's totally understandable. Banks want to know your story. When they understand your story, they feel okay.
So communication is really key here. Don't be afraid to talk to your bank.
Yes, if the bank asks you questions, that's a normal part of their job. They're not accusing you of anything. They just need to understand. And most of the time, a simple explanation is enough.
Okay, let's talk about real-life examples. Many of our listeners send money back home or they work cash jobs. Let's talk about what's normal and what might cause problems.
Let's start with sending money to family. This is extremely common. Millions of people in the U.S. send remittances, money sent to family in another country, every single month. This is completely legal. But the way you send it matters. If you use a regular service like a bank transfer, Western Union, Remitly, or Wise, those services are all regulated. They keep records. They report large amounts when required. This is all normal and legal. There's really no reason to use unofficial methods.
So, using official regulated services is always the safer choice. What about people who work in cash?
Very common too. A lot of people in the U.S. get paid in cash. Restaurant workers, construction workers, housekeepers. This is not illegal. But what matters is that you keep records of your income. A simple notebook or spreadsheet that shows when you received money and how much. When you deposit your cash, you can tell the bank, this is my weekly paycheck from my job. Banks are used to hearing this. The key is honesty and consistency.
And what about keeping cash at home versus using a bank account? I know some people prefer to keep cash.
It's not illegal to keep cash at home, but it can create problems if you suddenly deposit a large amount later. If you save $5,000 at home for 6 months and then deposit it all at once, the bank might wonder, where did this money come from? Why didn't you deposit it before? A bank account creates a paper trail, and a paper trail is your friend. It shows a clear story of your income, your expenses, and your savings. Without it, everything is invisible, and invisible money raises questions.
I love that. A paper trail as your friend. Okay, so let's talk practical steps. What do you recommend people actually do?
First, use a bank account. Open one if you don't have one. Many banks accept an ITIN, an individual taxpayer identification number, instead of a social security number. Some even accept a foreign passport and a utility bill. So don't assume you can't open an account. Ask what documents they accept.
Great. What else?
Second, keep records of your income. Write down when you get paid in cash, and if you receive money from family, keep a record of who sent it and why. Even a simple text message saying, I'm sending you $500 for rent is a useful record. It shows the purpose of the money. Purpose matters a lot. Money with a clear, honest purpose is never a problem.
Oh, I didn't think about text messages as financial records. That's really smart.
Third, be consistent. Deposit your money regularly, not in large, irregular amounts. Consistency creates a pattern banks understand, and a pattern that makes sense doesn't raise questions. And fourth, don't try to trick the system. Don't break up large amounts on purpose to avoid reporting. Don't ask someone else to deposit money for you to avoid the limit. These actions are illegal, even when the money itself is legal. Banks have sophisticated technology to notice these things.
So,
Second, keep records of your income. Write down when you get paid in cash, and if you receive money from family, keep a record of who sent it and why. Even a simple text message saying, I'm sending you $500 for rent is a useful record. It shows the purpose of the money. Purpose matters a lot. Money with a clear, honest purpose is never a problem.
oh, I didn't think about text messages as financial records. That's really smart.
Third, be consistent. Deposit your money regularly, not in large, irregular amounts. Consistency creates a pattern banks understand, and a pattern that makes sense doesn't raise questions. And fourth, don't try to trick the system. Don't break up large amounts on purpose to avoid reporting. Don't ask someone else to deposit money for you to avoid the limit. These actions are illegal, even when the money itself is legal. Banks have sophisticated technology to notice these things.
So, the message is if you have honest money, just be honest about it. Don't overthink it.
Exactly. Honest people don't need to hide. Banks aren't the enemy. They have rules to follow, rules from the government called the Bank Secrecy Act. When you understand the rules, you can work with the system instead of feeling scared of it.
Oh, I didn't think about text messages as financial records. That's really smart. Let's do a quick vocabulary review. Currency means money, physical cash, coins, and bills. Transaction means any financial activity, depositing, withdrawing, sending money. Suspicious means something that doesn't fit your normal behavior, something unusual that makes the bank ask questions. And structuring is breaking up large amounts to avoid bank reporting, which is illegal even with clean money.
And one more important word, transparency, being open and honest about your money. When you're transparent with your bank, you explain clearly where your money comes from and what you use it for. Transparency builds trust, and trust makes everything easier.
I love that word. Okay, let's bring it all together. Summary time.
Number 1, the $10,000 rule means banks must report cash transactions of $10,000 or more. This is called a Currency Transaction Report, or CTR.
Number 2, this reporting is completely normal and legal. If you have honest money, you have nothing to fear. Number 3, banks watch patterns, not just amounts. If your behavior suddenly changes, the bank might ask questions. Just be honest.
Number 4, structuring is illegal. Don't break up large amounts on purpose. Number 5, use a bank account. Keep records of your income. Be consistent. And number 6, the most important one, be honest. Transparent people don't have to worry. The system is designed to catch people who are hiding things. If you are not hiding anything, you're safe.
And one final thought. If you're ever in a situation like Carlos, if the bank asks you questions or puts a hold on your account, stay calm. Don't panic. Ask them politely what information they need. Bring documents if you have them. The bank is doing its job, not targeting you personally. Stay calm, be honest, and communicate. Those 3 things will solve almost any banking issue.
That's beautifully said. Most people, the vast majority, are completely fine. And now you have the knowledge to handle any question your bank might ask with confidence.
That's our episode for today. I hope this helped you feel more confident about banking in the United States. This is real-life English, the kind of conversations and situations you will actually face here.
If you want to learn real-life English like this, subscribe to Speak English in the USA. We cover real topics, real vocabulary, and real situations that help you live your life with confidence in America. New episodes every week. Leave us a comment with any questions. We're here for you.
Thank you for listening. I'm Alex.
And I'm Taylor. See you next time. Bye, everyone.